Hello, I'm Carey Cooley.
And I'm Brent Kerwecker.
Thank you for joining us today. April is often considered one of the best months for stocks. The S&P 500 closed positive during the month of April 16 out of the last 17 years. Brent, how did the markets do this April?
This April was no spoiler, with all three major indexes finishing in positive territory. For the month, the major indexes finished as follows. The Dow was up 2.48% for the month and is up 2.87% year-to-date. The S&P 500 finished up 1.46% for the month and is up 8.6% year-to-date. The Nasdaq finished up 0.10% for the month and is up 16.8% year-to-date. And the U.S. Aggregate Bond Index finished the month up 0.36% and is up 3.3% year-to-date.
We received good news in April as it relates to inflation. In March, the Consumer's Price Index reduced to 5%. As a reminder, inflation peaked last June at 9%. The Fed's target for inflation is to hover between 2 and 3%.
Despite this positive news, the Fed did decide to raise rates again 0.25% in May. Although this was expected, we were hoping they would have hit the pause button and allow things to start to play out. We've received many phone calls in the weeks following the collapse of Silicon Valley Bank and other banks as well, as it relates to FDIC insurance. To check the financial strength of your bank or credit union, please visit BauerFinancial.com. We suggest working with financial institutions that have a Bauer financial rating of 4 to 5 stars. We've also been encouraging clients that have over $250,000 in savings to contact their bank just to review their FDIC insurance coverage.
For the many clients that have purchased CDs through LPL Financial, just as a reminder, your CDs are FDIC insured.
For the clients that are in our model wealth portfolios, we have made a couple changes in the last few weeks as it relates to our growth strategy and our income strategy. We're beginning to reduce our position in value funds in favor of growth funds. In our income strategy, we saw some opportunity to change out a few funds to generate additional dividends.
There's an old saying that says, sell in May and go away, but is that good advice? The summer can mean a slowdown as people shift to travel. That does not mean the markets hit this pause button. Bloomberg released a chart demonstrating that over the past 40 years, the stock market has had an average return of 3.2% from the months of May to August. The markets were higher in 75% of those periods. Based on historical performance, we would say stay in May.
Our position continues to remain the same, and that is we are heading for a mild recession. We are seeing a moderate softening in the labor markets and expect corporate profits to lessen as the year continues. Year-to-date performance in the major indexes has been very solid, but we do anticipate volatility through the remainder of the year.
Thank you for watching this month's video. Remember to like and subscribe to the channel and stay tuned for our next video.